Warren Buffett and Charlie Munger are legends in investing. Few people comes close to them in maintaining a high return over decades. But will their method in investment be as relevant now, year 2021 and beyond, as compared to their golden era? Technical analysis will become more and more important when choices become more, for fundamental analysis becomes not as relevant as before due to massive competition. Unicorn companies, growth companies, and even growth companies have shorter growth lifespan due to competition, like example Netflix, and next we have Disney coming up. Amazon, we have Alibaba, we have Pinduoduo, we have SEA, in Shopee and Lazada. Electric vehicles, we have Tesla, Xiaopeng, NIO, and even traditional car manufacturers coming into picture. Well, it is definitely becoming more difficult and different on the ways we trade. That aside, what we can learn from them are some of the evergreens, lifelong advice that can be extremely helpful. And fundamental analysis will always be important as it forms the basis and limits the number of companies one will need in their radar watch list. Now let us go through some valuable advice given by Warren Buffett and Charlie Munger that are still applicable in my opinion for trading in the 21st century.
If you take the modern world where people are trying to teach you how to come in and trade actively in stocks.
What's up, Tim Sykes, millionaire mentor and trader here. I want to teach you, I want to help you.
Well, I regard that as roughly equivalent to trying to induce a bunch of young people to start off on heroin.
We're here to support you. I want to see you on this jet with us next time. It's awesome, and you can totally do it. You love Join us right now. You love Getsu, admit it. You just don't know it.
It is really stupid. And when you're already rich, to make your money by encouraging people to get rich by trading.
If you're a millionaire, why sell a course?
Then there are people on the TV, and they say, I have this book that will teach you how to make 300% a year.
The Millionaire booklet's going to give you 8 steps, and guess what?
And all you have to do is pay for shipping.
First, you're going to pay shipping and handling.
And it's ridiculous. And the people that do this all day think they're useful citizens, but they mislead you on purpose. And I get tired of it, and I don't think it's right.
You're giving away your free book. You're just trying to sell me stuff. Of course I am. I have no shame. I have no guilt. I have no hesitation.
All the people I know who are successful entrepreneurs are not selling courses on entrepreneurship. Successful entrepreneurs because they have some business that's working and they're mostly just doing that. If they're selling courses, then you are the business. If they're selling courses, then you are the business.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you really gotta grab them when they come, because you're not going to get 500 great opportunities. You would be better off if when you got out of school here, you got a punch card with 20 punches on it. And every financial decision you made, you used up a punch. You'd get very rich because you'd think through very hard each one. I mean, you went to a cocktail party and somebody talked about a company, you didn't even understand what they did or couldn't pronounce the name, but they made some money last week and another one like it. You wouldn't buy it if you only had 20 punches on that card. There's a temptation to dabble, particularly during bull markets. In stocks, it's so easy. You know, it's easier now than ever because you can do it online. You know, just you click it in and maybe it goes up a point and you get excited about that and you buy another one the next day and so on. You can't make any money over time doing that. But if you had a punch card with only 20 punches, you weren't going to get another one the rest of your life. You would think a long time before every investment decision, and you would make good ones and you'd make big ones. And you probably wouldn't even use all 20 punches in your lifetime, but you wouldn't need to.
We have to deal in things that we're capable of understanding. And then once we're over that filter, we have to have a business with some intrinsic characteristics that give it a durable competitive advantage. And then, of course, we would vastly prefer a management in place with a lot of integrity and talent. And finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life. That's a very simple set of ideas. And the reason that our ideas have not spread faster is they're too simple. The professional classes can't justify their existence if that's all they have to say.
Technical analysis is becoming more and more important. Now take an example for this Apple stock. Alright, this is Apple. Okay, so Apple stock, is it a good stock? Yes, it is. Fundamentally, there's nothing wrong with it. You know, even Warren Buffett earned that much with Apple stock. But if you couple in together with technical analysis, just example, I sold it at almost the absolute peak. I sold it at 157.26. Okay, so this is where I sold it on the day before it crashed. Is due to technical analysis. So if you couple both technical and fundamental analysis, it's a good thing. It's a good skill to have. Why not do it, you know? This is just one of the examples. Let me show you a few more examples. Okay, so now this is the second example for Alibaba. Look at this. I bought it here. Why did I buy it here? Because of technical analysis. Is Alibaba a good stock? Yes, it is. Recently, Charlie Munger bought a lot, right? At 180 something. I got it at a lower price than Charlie Munger at 143, you see? Okay, because due to technical analysis, I bought it at the Fibonacci area. And will I sell it? No, I probably will not unless it breaks through this level. Now, there are several other examples which I shared in my Moomoo trading platform. I mostly bought and traded in the indexes, Hang Seng or Dow or even Nasdaq, which I profited handsomely. I usually share my calls, and you can feel free to do your own due diligence and follow me if you want to. And recently, Tiger Brokers have contacted me to do a review for their platform, which I would love to do that. And probably my next video will be using Tiger Brokers to do some analysis for Uber and Nvidia, which my followers requested. Do subscribe and thank you.